My name is Niharika Valia and I am with you with the area of accounting and financial management for bankers. Today I'll be looking forward to the next class for JIB 2023 May-June attempt. So let's look forward to it. What are we having today? Today we'll be continuing with the financial management that we were discussing. That means we'll be talking about the concepts of balance sheet today. What exactly is balance sheet? How does it look like? And what are the various concepts which are hidden under this particular format? Let's understand it in detail. Number one, when we talk about the balance sheet, it's actually a statement, which is the last level that we prepare while completing the accounting cycle. Yes, this is the last one that we prepare. After this, the companies prepare cash flow statements. So yes, there's one or two maximum more steps. That is, the analysis starts after this. So this is basically the last step of preparation of books of accounts, and after this, the ultimate analysis begins. What exactly is balance sheet? How does it work? And what are the various concepts which are related to this? Let's quickly understand it. Okay, so when we talk about the balance sheet there, how does it look like? This is the balance sheet. The balance sheet is a statement, as I told you. That means there's no debit side, there's no credit side. It's basically a statement. When we say it's a statement, it has got one side which is called the asset side. It has got another side which is called the liability side. Under this, what happens is we have two sides. The asset side includes both long-term and short-term assets, while the liability side includes both long-term and short-term liabilities. Right? This is how we define it. It has current liabilities as well as the non-current liabilities. So let's talk about this. This particular format that you can see is for the balance sheet as on a particular day. It's also called a position statement, as we would like to know what's the position of the organization on a particular day. That is the last day of the year. And that's how we're going to find it out. So this is what we talk about it in terms of the management. How do we talk about it in detail? It goes like the current assets would include everything which can be converted into money within a period of 1 year and which cannot be converted into money within a time span of 1 year. That is, it takes more than a year. Would be treated as fixed or non-current assets. So under current assets, what do we have? The money that we have in cash, or the money which we have in our bank accounts, inventories, that is the stock which went unsold during the year. And then we have sundry debtors, the people who are supposed to pay to us, and bills payable. This is going to be bills receivable, everyone. There's a mistake. It's going to be bills receivable. The money that we are supposed to receive from someone is called bills receivable, right? Prepaid expenses, that means we have paid in advance. So definitely we are in a situation where we are relaxed and we don't have to pay further. It's just something that we've already got. And then there's accrued income. The income which we will be, accrued income is the income which we have, which is due for us. That is what we call as accrued incomes. And there we have the non-current assets, the assets which are used for more than a year. That means building, land, plant and machinery, furniture, as well as goodwill. Goodwill is the reputation of the organization. Now, this is the total of assets, whatever we have bought for the business. But think about it now. If I buy something for the business, what is it based upon? If I buy something for the business, it can be based upon the money that I already have or the money that I've got for the business. That means it can be based upon any of these things. Let's look forward to it. If they talk about the current liabilities, that means the liabilities which we are incurring for the sake of it, that the liabilities which we are supposed to pay for within a time span of 1 year. That is the trade creditors. Then we have bills payable, outstanding expenses, advances, then unearned incomes, the money which we have received in advance but we are not liable to pay, which we haven't done the work yet. And then we have the short-term loans. So these are all the current liabilities, and then we have the non-current liabilities, the liabilities which we are having but we are supposed to pay after a period of more than 1 year. That means the long-term loans or the debentures, right? And then we have the capital. The capital of the organization is the money invested by the owner itself. If the owner has invested this money, that would say whatever the capital they have already is called the opening capital. Then if he adds additional capital, it would be added. Then whatever money, whatever drawing on, and then if there is any interest on capital, it is added. Interest on drawings, it is subtracted. So there we get either a profit or a loss. That's what we define as capital there, right? So this is what we call the assets and the liability side of the balance sheet. The balance sheet does not have a debit and credit side as it's a statement. See, currently is a horizontal balance sheet. The vertical balance sheet is prepared by the companies, right? So this is something that we'll be learning soon, but before we hurry up and understand how a company prepares its balance sheet, it's way better to look forward to this entire topic from the point of view of a company, from the point of view of a sole proprietorship. Once you are done with the concepts, then we'll quickly move on and talk about that in further details, right? So this is it. Let's talk about the MCQs of this particular concept. So let's understand this concept deeply. Here comes the first question. The first question says trademark is a tangible asset, a current asset, a fixed asset, or a liability. When we talk about trademarks is basically it's a registered trademark is basically registered, and there it is based upon the fact that if I get myself registered in terms of a trademark, then nobody can use the trademark other than me. It's my personal identity in terms of my trading. So it's a tangible asset, a current asset, a fixed asset, or a liability. If I talk about a trademark, it's actually an intangible asset. Oh, it has basically, there's a little change. This has to be an intangible asset. It cannot be touched. It is there only in terms of documentation. So if we have to define its value, it's given only in the documentation. So we'll call it an intangible asset. So the correct answer is intangible asset. The next question is outstanding salaries is shown as. When we talk about outstanding salaries, what does it mean? The amount that we are supposed to pay to our employees is called outstanding salaries, isn't it? Then an asset in the balance sheet, a liability in the balance sheet, adjusted profit and loss account, or both B and C. So basically, if I'm supposed to pay to my employees and I haven't paid it yet, it's a liability for sure. But at the same time, among my salaries, I need to add up the amount that is due, but not written in my books of accounts yet. So it would be added in the P&L, right? So we'll call it both B and C because it's a liability, should be recorded in the balance sheet. On the liability side, okay, it is basically a current asset as well, right? It's a current asset. In the books of accounts, it will be treated as a current asset. Next question, advance commission received existing in the trial balance is. Advance commission received, that means I haven't given the services to receive the commission yet, but I am given this particular commission in advance. So when I receive it in advance, then asset side of the balance sheet, liability side of the balance sheet, debit side of the profit and loss account, or credit side of the profit or loss account. Where is this shown? Whenever we have any advance commission received, I've received that money in advance. So whenever I receive something in advance, it would be treated in the area of liability side of the balance sheet because I've received in advance. That means I'm bound to serve that particular person in terms of the thing for which they have paid the commission yet. So this means it would be treated as a liability because I owe to them, right? Then comes the next point. Balance sheet is prepared with the balances of which of the following? All balances in the ledger, or balances of a personal account, balances of real account, balances of real and personal account. See, balance sheet is something which clearly states that it records assets, liabilities and capital account. Does this mean that it records the expenses and incomes? No. All the nominal accounts goes into the profit and loss account. That means for all the nominal accounts, we prepare profit and loss account. And when we talk about the balance sheet, it prepares the balances of which of the following? All balances in the ledger, balances of personal account, balances of real account, balances of personal as well as the real account. The balance sheet is prepared with balances of, it includes all the real accounts because it includes all the assets, but it also records all the liabilities as well. Now, that is the personal accounts. That means we're supposed to pay either to the bank, either to a person, either to the business itself. That is the capital. So basically, it includes all the personal accounts as well as the real accounts. That means all the assets. And in terms of personal, it includes all the capital and the liabilities. So that's it for the day. Now let's move on to the next question. It says the drawings is deducted from sales, purchases, return outwards or capital. What is drawings exactly? Drawings refers to the amount that I have withdrawn from the business for my personal use, isn't it? If I withdraw money from the business organization for my personal use, it's called drawings. But that means that whatever money I invested in the business is being lessened because I am taking money out of the business. For example, I introduced 10 lakh into the business, right? I introduced 10 lakhs in the business and then I withdrew rupees 2 lakhs out of it, right? So that gives 8 lakhs. That simply means if I withdraw some money, then it is reducing my capital, isn't it? The money which I have invested in the business. So in this case, it would be covered as, this is wrong. The answer is drawings is deducted from capital. That's the wrong answer. It is capital. Just a mistake there. Now comes the next question. Expenses incurred to the manager's office. Air conditioned is. See, basically the manager who is working in the organization, he cannot work in weather which would be very, very warm and at the same time where there's a good amount of precipitation in the air. So it becomes difficult to work in such an atmosphere now. So the air conditioning is required in every nook and corner of the office. So when expenses are incurred to get the manager's office air conditioned, is it a capital expenditure, revenue, deferred revenue or capital income? It's an expenditure that we incur for the sake of it that we are working in the organization and we need to maintain that thing called healthy environment for the manager to work. Because think about it, if he cannot work in that environment in a relaxed manner, how will he give you the output? Isn't it? To give you that particular output, he needs to earn more. He needs to work in that particular atmosphere in a good way. Now, so basically, this is termed as a capital expenditure. We prepare an asset so that we can earn more. That is what we define as capital expenditure. The following is the entry for making a provision for bad debts. Provision for bad debts, credit creditor, provision for bad debts, P&L, provision for bad debts. Then we have bad debts and P&L, two provision for bad debts. What do you mean by provision? I can see many of my debtors are not able to pay the money on time. If the particular person is not able to pay the money and he states that he has become insolvent, so I cannot ask them for money at all. Isn't it? That is what we define as provisions. So whenever we have a certainty that the other person might not pay to us, that is what we can define as provision. Then if there is a certainty to an extent that the person will not pay, so we keep a little money aside, which is as per the concept of conservatism, that is anticipate the losses but not profits. So in this case, it would be taken in the profit and loss account and it would be treated as a provision. So basically, it would come up as debit the P&L and credit the provisions for bad debts. Okay, here comes the next question. The revenue recognition accepted for gold is recorded in the books as soon as the production is complete because of the principle of conservatism, realization, objectivity, or none of the above. When we talk about revenue recognition, that means we recognize the revenue. When do we record the income in terms of our books? We would record it in our books as per we know that we'll make money now. If we have extracted gold, we'll in any case receive the money. This is what we call the concept of realization. We know that the amount would be received in any case, so there's no harm in recording it right away in our books of accounts, as the money would be received to us in any case. So that's it for the day, everyone. I think there's one more question left. Yes, there's one more question left. This is a practical question. We'll deal with this numerical question in tomorrow's class. Till then, this would be your homework. If you would like to try, then kindly take a screenshot and try it for the day. Now, tomorrow, we'll start with this particular numerical question of the financial statements, right? So this is it. If you're preparing for the JIB, have you reviewed our course yet for the same? Our JIB 3.0 batch is air. That means the third batch for the JIB is air. So if you haven't checked out our courses yet, then I believe you should really look forward to our courses. Check it out once. What you can do is you can look forward to the www.adda247 website. That means you can look forward to it, and then there it is. We have the JIB and CIB courses. You can look forward towards the era of JIB, CIB ka Mahapack. Under Mahapack, the double validity is going on. That means if you're preparing for the JIB, what you can do is you can prepare for JIB as well as CIB. Not only for the English medium batch, you will also get the bilingual batch. Under this Mahapack, you don't not only get the details for JIB and CIB, but also the syllabus is covered, test series are covered, mock tests are covered, revision batches are covered, MCQ batches are covered, fast track batches just before the examination. Everything covered under the JIB, CIB ka Mahapack. That means if you're preparing for JIB and CIB, that is the perfect time. This is the perfect time to look forward towards our courses, as if you purchase it now, you'll get 81% of discount. Along with this, you will get double validity. Look at the benefits that you get. Live classes, mock test series, video solutions, all revision batches recorded, all ebooks, numerical batches, case studies, topic-wise questions, and even the in-depth analysis. So everything is there. All you need to do is you need to click on the area of buy now. The course is available at 81% discount. By using the code Y541, you will get an 81% discount. You'll get it for 10,799.20. That means you'll get it 10,800, but it is in double validity. That means you get it for 24 months. That means you have time to prepare for JIB. Along with that, it also covers the CIB. It covers bilingual batches as well as the English medium batches. It covers